So, you've heard the stories. One side swears crypto will make you a millionaire by next year. The other is screaming it's a bubble that's about to pop and leave everyone broke. What's the real story? Is crypto your golden ticket or a digital house of cards? We're going to cut through the hype and get real about what you need to know before putting a single dollar into crypto in 2025. First, we'll look at the bull case, the real arguments for why crypto could be a revolutionary financial tool. Then we'll stare into the abyss of the bear case, the hacks, scams, and stomach-churning volatility that define this market. Finally, you'll get a clear-eyed reality check for 2025 so you can make your own call. Let's start with the bull. Why are so many people convinced crypto is the future? It all starts with Bitcoin, often called digital gold. Bitcoin's main draw is its built-in scarcity. There will only ever be 21 million coins. That's it. This is a huge contrast to traditional currencies, which governments can print more of whenever they feel like it, making your money worth less. This fixed supply is the core reason many see Bitcoin as a long-term way to protect their wealth from inflation. And now, the big players are finally on board. The launch of spot Bitcoin ETFs from financial giants like BlackRock and Fidelity was a total game changer. These are regulated, easy-to-buy products that open the floodgates for traditional investors, hedge funds, and even pension funds. This isn't just a bunch of tech enthusiasts anymore. It's a strategic move by Wall Street. We're seeing major banks like JP Morgan and Deutsche Bank building out entire digital asset teams, pulling crypto deeper into the global financial system. While the price swings are wild, the long-term performance is tough to ignore. If you had put just $1 into Bitcoin back in 2015, it could have turned into tens of thousands of dollars by 2025. For anyone with the patience to stomach the insane ups and downs, that kind of growth is a powerful argument. Beyond Bitcoin, you have the wild world of altcoins. Basically, every other cryptocurrency. Here, the game shifts from storing value to driving innovation. Ethereum, for instance, gave us smart contracts, which are the building blocks for decentralized finance, or DeFi. The goal of DeFi is to rebuild all the services your bank offers, lending, borrowing, trading, but on the blockchain with no middleman. Imagine a bank that's open 24/7, available to anyone on the planet with an internet connection, and not run by a single corporation. Stablecoins have also become a massive part of the ecosystem. These are tokens pegged to real-world assets like the US dollar, and their market size has exploded, hitting an all-time high of over $280 billion. They're becoming the essential plumbing for the digital economy, used for everything from sending money across borders to helping companies manage their cash. In countries struggling with hyperinflation, stablecoins have become a genuine lifeline, letting ordinary people save their money in a stable currency. Sure, altcoins are much riskier, but they're where the cutting-edge tech is being built. This is the frontier for everything from blockchain gaming and tokenizing real-world assets to creating new forms of decentralized organization. For the bulls, the risk is absolutely worth the chance of getting in on the ground floor of the next big thing. Alright, let's flip the coin and look at the side that keeps regulators up at night and gives even seasoned investors heartburn. The bear case for crypto in 2025 isn't so much about what it could be, but about the chaotic and frankly dangerous state it's in right now. The number one risk? Security. 2025 has been a brutal year for crypto theft, with a jaw-dropping $3.4 billion stolen by early December. These aren't just amateur scammers. We're talking about highly sophisticated, often state-sponsored attacks. North Korean hacking groups, for example, have had a record-breaking year, siphoning off over $2 billion in 2025 alone, a 51% jump from the previous year. The poster child for this danger was the catastrophic hack of the Bybit exchange in February. In one of the largest crypto heists in history, attackers drained an estimated $1.5 billion in Ethereum. This single attack accounted for a huge chunk of all funds stolen in 2025 and was a horrifying reminder of the danger of keeping your assets on a centralized exchange. Unlike the money in your bank, these crypto deposits are not insured. If a major exchange gets hit, your funds can vanish forever. And it's not just massive exchange hack. Individual investors are getting wiped out by increasingly clever social engineering scams, where attackers trick them into revealing their passwords or recovery phrases. While the number of these personal wallet compromises has surged, the battle against theft remains a huge challenge. Then there's the volatility. It's in a class of its own. While Bitcoin can hit incredible highs, the altcoin market is an absolute minefield. For every success story you hear about, there are thousands thousands of failed projects that have crashed to zero. The performance data for late 2025 shows a market under pressure, with altcoins being particularly vulnerable during downturn. This makes timing the market nearly impossible and turns many altcoin investments into little more than lottery tickets. Finally, you can't ignore market manipulation. A huge portion of trading on unregulated exchanges is suspected to be wash trading, where someone is both the buyer and the seller. This creates fake volume to pump up a coin's price and lure in unsuspecting investors, further undermining the market's credibility. So, where does this leave us at the end of 2025? The truth is, crypto is stuck in a massive tug of war between institutional adoption and systemic risk. On one hand, the institutions are here to stay. Spot Bitcoin ETFs are a reality, and the biggest names in finance are building the infrastructure for digital assets. That brings a level of legitimacy and money that was unthinkable just a few years ago. We're also seeing the first real steps toward regulatory clarity. In Europe, the Markets in Crypto Assets (MiCA) regulation is now fully in effect, creating a unified set of rules for the entire EU. The US and UK are also actively drafting their own framework. The conversation is no longer if crypto should be regulated, but how to do it without killing innovation. But on the other hand, the risks have become more severe. The massive exchange hacks show that centralized platforms are still a major weak point. The success of North Korean hackers has turned crypto theft into a geopolitical issue, forcing governments to crack down. The market itself tells a story of tension. After peaking near $4.4 trillion, the total crypto market cap recently pulled back to around $2.93 trillion, wiping out most of the year's gains as macroeconomic pressures took their toll. The Crypto Fear and Greed Index spent much of the latter half of the year flashing signs of extreme fear, a perfect illustration of how fragile investor sentiment really is. So the verdict for 2025, crypto has not yet earned the title of a secure investment. It is still a high-risk speculative asset class. The key difference now is that it's a speculative asset class with serious institutional backing and a much clearer path toward regulation. So what's the final takeaway? Crypto in 2025 is a paradox. It's a glimpse into a decentralized financial future, with major institutions laying the tracks for the train to go mainstream. But it's also a treacherous landscape, full of catastrophic hacks, gut-wrenching volatility, and a regulatory battle that's just getting started. It is not a guaranteed path to riches, but it's not a worthless fad either. It's a brand new technology with world-changing potential and equally massive risk. If you're going to get involved, you have to go in with your eyes wide open. Understand Bitcoin's potential as digital gold, but also respect the fact that the altcoin market can feel like a casino. Prioritize security above all else. That means using hardware wallets for storage and never, ever leaving a significant amount of money on an exchange. And maybe the most important rule, only invest what you are genuinely prepared to lose. The point of this is to give you the context to think for yourself. And now I want to hear from you. After hearing both sides of the story, where do you land? Is crypto the future, or is the risk just not worth the reward? Drop your thoughts in the comments below. And if you learned something today, do me a favor and hit that subscribe button and ring the notification bell so you don't miss what's next.